Hi, Kevin Retcher here, owner of First Meridian Mortgage. Today, I want to talk about a story. I got an email from a client that said, Kevin, I made a mistake by not going with you. Here's the thing. They want to know what my no-cost 30-year fixed rate is right now, and they want me to monitor their situation going forward. And they said that they would only use me. Well, here's the thing. That client knows and is humble enough to have said that he made a mistake. But what was his true mistake, right? His true mistake, if you look at these chips, $25,000 chips, right? Two of them, three of them, four of these $25,000 chips. Here's the thing. He ended up with an interest rate at 6.5 on a $900,000 loan, and I was offering him 6.25. Now, in reality, a quarter point doesn't sound or seem like it's that much, right? But when you truly look at the monthly savings, it's $147 per month and $40 the very first month of principal. See, the common mistake that people make is they only look at the cash flow on a monthly basis. But if they do that, the actual payment savings over the life of the loan is only two of these chips, $52,976, right? But what people don't realize, and it's the most important part of this video, is this $40 difference that you pay the very first month on the loan, essentially $813 versus $853 going to principal. So time value of money, many people will say, oh, I don't want to refinance because you pay more interest on the earlier years of the loan. But here's the thing, you also pay more principal with a lower interest rate. Even though you still make 360 payments, that extra amount of principal that you pay in the earlier years of the loan over a 30-year period, time value of money, rule of 72, doubles. If you divide the percent into 72, that's how many years it takes to double. So if this person never refinanced ever again, his decision to not go with me and save that 0.25% was a $105,000 decision. So that's like going to the casino and getting four $25,000 chips. Here's the thing. The casino is essentially the bank, and they will keep your chips if you want them to. Now let's get into some of the market news. So if you're looking at the rate of inflation versus the rate of home price appreciation, inflation is actually outpacing the appreciation you're getting on your home right now. Now, Kevin Warsh is adamant that he is going to attack and bring down inflation to the 2% target that the Fed has. Now, how he might do that, if you're looking at the Fed watch recently, there is the next Fed meeting is at the end of the month, 729, and there's a 74% chance that the Fed leaves rates status quo. So that would be Kevin's second meeting, right? Getting his feet under him. But the third meeting, they're predicting 51% chance that he actually raises interest rates. So that would give his committees essentially about 2 months to work on their plan and then probably start implementing in September, right? So if you're out there looking for a mortgage, the sooner that you can get locked into the right house with the right purchase price, buy within your means, within where the interest rates are right now, and then potentially do a no-cost refi at a later date to save on your carry cost, right? Another thing in the news, Scotsman's Guide came out with their annual ranking of top veteran loan officers across the country. This is the coveted list that I strive to try to make. It's the top 100 veteran loan officers in the country. So if you're a veteran and you're looking to get a mortgage, check out this top list, top 100. Find the veteran that's in your state and give him a call. Give him the business. He's walked the same paths that you have. He's PCS'd. They understand what it's like to be in the military, and they understand VA loans. 40% of my business is actually VA loans, and I'm a veteran-owned mortgage broker, and there's other veteran-owned mortgage brokers in here. Maybe one is in your state. And then in closing, what I want you to think about is these poker chips and doing no-cost refis every chance that you get, right? You should find a local mortgage broker that specializes in no-cost refis and get to know what your actual numbers are, right? So last but not least, so the gentleman that we talked about that essentially lost $100,000, by reaching back out to me, I had him send me his current mortgage statement, and then we did an analysis, and we figured out where interest rates were today versus what he had. And then I also educated him that he would need a credit of approximately $5,600 from the lender to actually do a no-cost refi. So his first level that we're looking for is to try to get him back to 6.25 or below with a lender credit that is paid to him to cover his closing cost of $5,600. So we spent about 20 minutes going through exactly how a no-cost refi works, knowing how much the closing cost would be for him and his expectations. And then we also discussed how I would monitor it on his behalf. I have a couple different spreadsheets, and I actually have some AI models that are working in the background to flag any of the clients that I should be calling on a daily basis or a weekly basis, depending on what rates do. Of course, with interest rates having popped up, there are fewer refis happening, but there are a lot of individuals out there that got interest rates in the high sixes that could still do a no-cost refi even today, especially on VA loans. The VA IRRRL just requires a 0.5% lower interest rate to be able to take advantage of an IRRRL. So if you want to learn more about no-cost refis, check out one of the other videos on my YouTube channel. Thanks for watching. This is The Till, Truth in Lending and in Life. Catch you in the next video.